Let's shift focus to earnings now. JSW Steel from the Nifty pack will be reporting numbers today. Nigel is here to take us through what the street is expecting. Nigel, for JSW Steel, we have the cheat sheet in terms of production numbers.
Well, that's right. JSW Steel will come out with its set of numbers, and if you look at it in terms of the top line, there'll be a slender growth of around 1.5% odd, but margins will be under some pressure. In terms of the consolidated basis, it could even contract by around 400 to around 500 basis points odd, because the operating profit will come in lower. Net profit we are working with is around 1,400 crores or thereabouts. Let's get straight to the numbers then. In terms of the standalone numbers, we already have a cheat sheet. The production numbers are already with us. So the domestic operational numbers in terms of production, that's come in lower by close to around 3%. Remember, JSW Steel is functioning at almost optimum capacity utilization levels. So no big scope in terms of sales growth as well out there. So sales volume number we're working with is around 4.11 million tons. Now the street is working with the number of around 4 to around 4.2 million tons. So we're bang in the middle at around 4.11 million tons. Remember, on a sequential basis, they were sitting on some inventory. So that as well will be sold. And that should, sum up this 4.11 million tons, because that inventory would be sold. So on a sequential basis, actually, it'll look very, very good in terms of sales volumes. Realizations, that's going to be the big drag. Remember, on a sequential basis, steel prices have moderated. Both globally as well as domestically, prices have come in lower. And that's what's going to lead to the EBITDA per ton coming lower by close to around 2,000 rupees. Now, we're working with an EBITDA per ton of around 9,900 rupees. And that's the most important number for JSW Steel. What kind of an EBITDA per ton have they done? And what kind of a number can they guide going ahead? Steel prices are under pressure, as I said. The second factor would be that lower iron ore cost. That's something that could benefit them to a certain extent, because NMDC had cut prices a couple of times in the past quarter. The US operations as well, smaller part of their business, but that could see some pressure as well because of steel price moderation. All in all, management commentary will be key as well. Back to you guys.
All right, thanks a lot for that, Nigel. We will stand by for the numbers and also wait for the management commentary, like you said. But another company that is due to declare results today is Bata. Mangalam, a strong quarter expected? A strong quarter expected.
Pavitra, the stock has been a big mover. Over the last 1 year, it's gained about 85%. It's been at a record high, but about 7% off its record high recently, owing to the weakness that we've seen in the consumer space itself. But these are good shoes, expensive shoes, 55 times FY20 earnings. And why is it expensive? Because the street expects this momentum of strong results to continue. Over the last few quarters, we've seen very good results coming in from Bata. So what is the street working with this time around? Close to around 14% on the top line, 720 crores in terms of revenue that is expected. Add to that, we have the EBITDA. That is likely to grow much higher than the revenue growth, 36% growth. That means a margin improvement of close to around 260 basis points, 15.6%. This compares with around 13%. And as a result of a 36% jump in the EBITDA, the company is likely to post a net profit growth of 38.5%. So that is what the street is working with. Let's see whether the company goes ahead and delivers that or not. The big factor to watch out for will be rent as a percentage of sales, because the company has been selling more per square foot. Secondly, they have been rationalizing the rent that they have been paying in their stores. So watch out for that. Keep an eye out on same-store sales growth. These numbers are limited. They come by much later. But the frontline numbers is something that the street will be watching out for, especially given the fact that the stock is higher by about 85% in the last 1 year.